Good Monday morning. We hope you're going to have a great week. From the team here at Paycor, America's Mortgage Choice. Perhaps you've heard that the mortgage and real estate market is a confusing, challenging space. But there's money to be made, and your family finances need to be protected. So I applaud you for tuning into the RatePulse, where we're going to share some insider secrets on the mortgage business, the real estate market, as well as the interest rate market to help you make smarter financial decisions that will improve your family's bottom line. This week's market swerve shows what a little uncertainty can do. In fact, with questions abounding all week about the stock market, housing starts, existing home sales, inflation, and several other items, mortgage bonds took the news last week as a bit of an excuse to rally. As you can see here, we've been improving in bond land, which means lower rates, all week. Even on Friday, where they closed off the highs, as you can see here, the rates were good. The question is, can this continue? Maybe, but it's unlikely, and simply from a trading standpoint, rates should likely get a little worse next week. Keep this in mind as you consider talking to your loan officer about whether or not you should be locking or floating. In the media frenzy this week, we have several big issues to discuss. The first is an article from businessweek.com. It discusses the annual shareholder letter from Warren Buffett to the Berkshire Hathaway shareholders. Mr. Buffett believes several things of note. First, the housing market's going to recover simply because supply and demand will line up again in 2011. Second, the overhang of unsold inventory from the foreclosure crisis will be quote-unquote handled by then. Although he makes some interesting points, there really is no discussion of the coming wave of foreclosures in 2010 as a result of some of the continued decline in prices and increasing interest rates due to option arms adjusting. The question I have is, will that impact the market? Still, with his reputation as the smartest investor in the market, this article, found at businessweek.com, and the shareholder letter itself are worth a read. The second article we have in this week's media frenzy is located at Reuters.com, Reuters.com. It talks about the continued losses at Fannie Mae. The key factor here as it relates to mortgages is that since Fannie is owned by the government and Fannie is weak, there is likely to be a continuation of taxpayer dollars in the market for a while longer, and this is likely to keep rates low. This week's game changer, folks, is about loan modifications. Your editor is extremely sensitive to those who have been left holding the bag in this market and are faced with the specter of foreclosure. However, might have a reasonable chance at saving their home if we could get the system worked out. For those of you familiar with the loan modification and foreclosure avoidance space, you know it's a mess. Borrowers, homeowners, banks, servicing companies, and the government are all fighting over the details of how best to fix the situation, and yet, a year after President Obama promised relief, nobody has an effective plan or system in place. If you read nothing else, read this article. This article discusses in broad strokes the compromises that every party needs to make to get a system-wide solution in place. It's likely not perfect, but your editor believes it's the best summary of what has to happen for some steps towards relief to happen for everybody. Read this article at theatlantic.com. We also welcome your feedback on this article, just so you can tell us what you're thinking about what we're pointing out. Please introduce the weekly market update by forwarding our link to a friend that'll benefit from the information within. Someone that you know is always considering buying, selling, or refinancing. Introduce them to the loan officer whose name appears on the left-hand side of the screen. Paycor Mortgage would love to help them secure the best financing available in today's market, and you owe it to them to make sure that they get treated professionally and have a mortgage that's safe and secure for their family's financial future. Thanks so much for tuning in to the Rate Pulse this week. Make it a great week.